Good evening, Nick Inman from VolumeProfileTrader.com on Tuesday, June 26th. Looking at the S&P, looking at a 9-month chart, and the reason why I'm doing that is because the 1-year chart includes data back from last year that really doesn't, at the end of the day, it doesn't really matter anymore. There's been enough volume that we can look at a smaller time frame. So looking at a 9-month chart, you can see the point of control for the last 9 months is going to be at this 1310 level in the next day or so. And that should present the opportunity that we've been waiting for a move in the markets. Today we had consumer confidence and Case-Shiller home price index. Both of those came out. But tomorrow we have durable goods, pending home sales. That should help move the market. Then we have GDP and jobless claims on Thursday. And then personal income, Chicago PMI, consumer sentiment. So there are a lot of economic indicators that are coming out that should help move the market, bring volume in to at least give us a direction off of that 1310 level that we're looking at. Also remember, the end of this week is the end of the quarter, and that is usually a recipe for some type of, balancing of the books. So really be expecting a move, maybe the end of this week, going into next week. Remember, next week is holiday week, so be prepared for that. Also be prepared. The employment data, I believe ISM is on Monday, and all of that needs to be taken account for. So we have a lot of news coming out that's going to move the market. Be ready for that and take advantage of it. So, anyways, the S&P ended up bouncing off of this bottom end of the range. You should have gotten an email saying, look for longs and, do so accordingly. And I was looking at a few names, and I had a few names on my radar yesterday. And to be honest, I'm not sure if I mentioned these, but a name like Chevron. Yesterday, Chevron, looked like it made some type of tradable low off of last month's value area low, this month's value area low. You had a nice a buying tail towards the end of the day. Now that alone doesn't cause me to get excited about Chevron. This was yesterday going into today. We had 2 pullback bars, and the qualifying volume was yesterday towards the end of the day. So when we get this pullback, you need to be aware that on this weakness, you still have the opportunity to get long against these levels, these lows. And the weakness provided you the opportunity and had a nice rally into the high volume area. This is where you should have scaled out of some of your Chevron. So it wasn't a huge pop, but it was a tradable one, and that's just the market we have right now. It's tough, it's quick, and it's not providing much opportunity outside of 1 or 2 days. Another name, I'm actually not looking at American Express. I'm not sure why I brought that up. Apple. You're at the value area low here, and basically the point of control for the month. Going into the next couple of days, be opportunistic with, the fact that the last time Apple has been at these levels, it's been right for a move up to 587 and change, basically the value area high for the month. You need to be aware of that and realize that the opportunity could be here for a potential move higher in Apple. Now, with that said, you need to, I don't think there's a huge rush to get out. Maybe get involved, buy a little bit. Therefore, if you do get stopped out, which would mean your stop is right below these lows, probably around 566 or so. Um, you're not risking a whole lot. That's basically call it 1.5% um, below current levels, but you're getting involved, and just in case the market does break out to the upside, you are involved. And let me say, if the S&P has a breakout, I'm expecting something more. I would be expecting a move back up to 1400 or a move down to 1250 or so. The move down to 1250 isn't too much, but a move up to 1400, I think that has a little more juice in it, depending on where you're buying from. But that's why we're looking at today, double bottom, and then the market started to turn. I was thinking, wow, this is a pretty good opportunity as long as we can hold these levels, and we did, and therefore we kind of go from there. Not going all in because that's not necessary, but being involved to the long side. I think one thing to be aware of is, other than the big volume that we got on that reversal bar, the volume was pretty light today on an hourly basis. Even the afternoon volume was pretty light, and that just shows you that this rally doesn't have a lot of mustard to it, and you can see why. We're just in the middle of the range. We're just playing the range right now. But you look at this high volume area for even the month, 1306 up to 1318. That's where we're trading. Expect to move out of there, but for now, don't expect too much. An example, I was nibbling a little bit on some stock. Actually, the majority of my trading was through S&P futures today, but I was doing a little bit of buying. Had a nice little trade to the upside, and then going into the close, guess what I did? I shorted SPY ETF, and the reason why was because I wanted to remain long some of the names, but I didn't, without taking profit, but I didn't want to expose myself just in case the market opens up back down at the bottom end of the range. So what do? I short SPY to hedge, and therefore tomorrow I'll probably take it off for either a small gain, a small loss, or a break even, move on, and operate accordingly. But I just don't want to go into an overnight with overexposed to one side when we're at the top end of the range. I don't think that's necessary. I don't think that's good risk management. And if the market gaps up to 1328 tomorrow, I'm perfectly okay being short SPY because I'm also net long the market. And likewise, if the market dips down, opens at 1307, even 1300, I'm okay. I'm hedged, and that's the point. So overall, the S&P, we have defined risks to the long side, and that's about it. I want to look at some ETFs and then look at some currencies. So let's get into it. XLF, look at 1411. What's the exact? 1407 on the XLF is the point of control for the last 9 months. The only information that really matters to me. You want to look at it on a 1 year chart, then it looks a little bit different. But I'm going to stick with this 9-month period just because it includes the most recent trading activity. So let's look at some other names. XLE, you have a potential double bottom here. Look at a name like, Chevron, ConocoPhillips, all outperforming to the upside today. That's what you want to see, and you need to be aware of that. Retail, bouncing. Look at a name like Starbucks, higher low. XRT, double bottom. Starbucks consumer discretionary, but you're getting a potential higher low. Volume is pretty light. Be aware of that. But the point of control for the 9 months is coming on Starbucks and should be worth a trading opportunity, to say the least. Industrials, double bottom, higher low, call it what you want. I would stay away from this if the market were to rally, but looks kind of interesting. Just looking at Caterpillar, no. Deere, that looks pretty good. Uh, pretty good actually good volume today. Um, let me get off these stupid Fibonacci retracements. You have a huge high volume area here. You have the point of control, we're bouncing off of it. You have moving averages coming down, but you have defined risk, and you have a nice little U-turn here. I think if you wanted to scale in, place your stop at around 73.60 or so. See what happens. I wouldn't go all in because that's not necessarily worth it. Also, they have a dividend coming out. Looks like that's tomorrow. So you'll probably be able to get it for cheaper tomorrow. All right. Utilities coming down. I think that, to be honest, I think this is something you can stay away from. This is one of those things where you buy on, weakness at the 200 or something like that, and you kind of stash away. You don't have to buy utilities on a breakout. Let's not get crazy with that. That's not a long-lasting strategy. XME, new lows. Is this something you want to be buying? No. Don't do it. Stay away from it. I see that the volume is light, but there's no reason to get involved in the XME. It's showing you that there's no buying interest. Technology just kind of trading around, doesn't really look that good, doesn't really look that bad. It's just consolidating in a range. One thing, Amazon, pretty good day today, and we'll just look at it. eBay, just because I looked at Amazon, looked pretty good. But look at something like Qualcomm. This has fallen out and is trading much lower now. So after the pretty nice buying opportunity that we got, I want to say it was on the 4th. I would like to say it was on that day. It was either on the 4th or on the 21st. I remember we were buying, good little trade to the upside, and that was it. You take your profits, you run, you look to reload. Even here, you had a trading opportunity to the long side. It only lasted 2 days and barely went anywhere. So that's part of market recognition and understanding what's going on. All right, so really that's, I guess we could look at OIH. This is probably something that you don't want to be a part of. Look at Halliburton. Is that really something that you want to be buying? We bought it on the double bottom here and had a nice little trade to the upside, and then the real trade was to the downside. So that was my apologies for doing that, but the trade was still profitable. It just wasn't a monster like it is to the downside right now. Baker Hughes had a nice push down to 37 today, and then had a $1.25 reversal. That's a pretty big reversal. Take note. I'm looking at, actually the volume was pretty good in the final 2 hours, so it probably warranted some type of caution. I'm still long my 39 by 36 put spreads. Took half off yesterday, so today's move wasn't. I wish I held on and took profits yesterday or today, but I didn't, and that's part of trading. Okay, Euro. We have point of control for the month of June. Price can't even close above that level. That needs to be noted. I think we have an EU summit coming up in the coming days. That needs to be noted. And, in my opinion, you still want to be net short euros. And that's the trade. But more recently, like this past month, there has been more up and down, which have provided for opportunity. Which brings me to the dollar. The dollar is failing against the point of control for this current month. Decent selling volume, nothing too great. I would still, I'd be aware of this. Realize that, this should bode well for buying in the market. And, if anything, if it's short covering in the euro or, whatever the case may be, short covering in stocks, who cares? Take advantage of the pop you see in the market and make some money on it, because that's what we care about. We care about making money. We don't care about being right. However, the two kind of go hand in hand. Here's a great example. Gold, yesterday, intraday, awesome buying opportunity against last month's point of control. It was good for basically a 20-point ride to the upside. That's a big move in gold. Well, that's not a big move in gold, but to ride that in gold futures is a pretty big deal. You're pocketing a lot of money by doing that. Now, look at the move, though. It's all on light volume. You should be aware of that and realize that this is one of those one-day events where the sellers are probably going to control it, take back control. After all, they have been controlling it for the last week or so. And, look to reevaluate somewhere at the bottom end of the range. We're not there yet. Maybe we form a higher low. I doubt it. I would assume that we test these lows again. But you never know. And, you just look for more of the same. But these little opportunities that you get are enough to make you a very happy camper from the profitability standpoint. Just because I looked at gold, going to look at silver. Similar, you get this short covering rally, big pop, and that's it. You don't put anything more into that. It's basically off of a double bottom. We barely pierced it, and then once we started getting above it, that's all she wrote, and she kept going. So that's really it. Just to show it, 30-year futures, tight range, not much going on there. 10-year, same thing. These are, I'm not even going to comment because I'm really not sure. All I know is they continue to go higher. So, anyways, hope this helps. Hope it gives you an idea. Hopefully you got my email, maybe took a recommendation or so. Maybe you happen to buy Chevron. And by the way, when I sent out that email, Chevron was at, it was up like 0.5%, maybe a little more than that, 0.6%. So it ended up, you got a small move out of it, and maybe it has some follow through. But nevertheless, you're buying at a good level, and you got your entry, and you take it, especially when the S&P is at support, or potential support, and then the buyers showed it was support. So anyways, take care, have a good night, and I'll talk to you tomorrow.